Hi, good evening, everyone. Welcome to our Let's Learn Futures webinar series. This webinar series is brought to you by Bursa Malaysia and managed by our company. Our topic for this evening is Unleashing the Potential of Single Stock Futures, which is your SSF. Now, this session, we're going to divide into two different sessions. The first 60 minutes, I will be covering this topic, followed by 30 minutes of Q&A session. My name is Ting Ting. I'm the speaker for this session. Now, before I continue, can you please check whether you can see my slides? You can hear my voice or not? If you can see my slides, you can hear my voice, can you please just type in the chat box 111. I repeat, if you can see my slides, you can hear my voice, can you please just type in the chat box 111. Very good. How about the rest? Well done. Now, if you can't see my slide, you can't hear my voice, please follow these steps so that you can connect to us. Nothing much that we can do for you. To make sure that you can have a smooth streaming throughout the session for this evening, please off your video because video is going to take up a lot of bandwidth. So if you want to be very smooth in the whole session, your learning session itself, please make sure that you're off your video. I'm going to give you a very quick 1 to 2 seconds. If you accidentally on it, please just off it. Throughout my presentation, if you have any question, you do not need to wait until the end of the session, then only you start to ask your question. Along my presentation, if you have any question at any point in time, you can start to type in your question in the Slido. I'm going to answer all your questions at the end of the session. Now, how can you access to the Slido? First thing, can you see these three dots? You just need to click on the 3 dots. Subsequently, you click on Slido and you can start to type in your question. Now, please remember, do not send your question in the chat box because subsequently you are going to see the chat box is going to move very fast. I might miss out your question. So I repeat, please do not type in your question in the chat box. All your question, please type in Slido. So for those who are using computer or laptop, you can use this method. For those who are using tablet or mobile phone, in your phone or tablets, there's an advanced button. Click on the advanced button, you are going to be able to access to this Slido. Like what I say, you do not need to wait until the end of the session before you start to ask your question. Now, besides today's session, as you know, every Tuesday, we are going to have this Let's Learn Futures webinar series. Not only for today's topics, upcoming, like for example, next week, we are going to have a Mandarin topics. It's related to Bill Williams' futures trading strategies. This is going to be conducted in Mandarin. And subsequent week, on 23rd of September, we are going to have a Malay topics on aplikasi kaedah Wyckoff dalam pasaran FCBO. And the final week for this month, we are going to have an English session on analyzing fundamental drivers in the crude palm oil. So you're going to see that we are going to have different speakers covering in different languages for different topics. So if you're interested in any of the topics, what you can do is you have 2 methods. The first method is you can scan this QR code and register accordingly. Or the second option is in the chat box. You can see that our admin already placed the link in the chat box. You can copy the link and you can register. Once you register, you can add in on your calendar so that you will not miss it. I repeat, you can take a photo or else you can print screen or you can copy the link. You can register at a later stage. Any topics that you like. Now, not only Let's Learn Futures webinar series, Bursa Malaysia also provide you with a series of Let's Learn Futures online workshop. Now, please listen carefully. This online workshop is not suitable for everyone. This is mainly for those who really seriously wanted to get yourself started in futures trading, and this is for you. For these 2 online workshops, we are going to separate into morning session 3 hours and afternoon session 3 hours. And we are going to guide you from A to Z until you're able to trade with your first futures contract. And very important things that you need to take note, upcoming two sessions on 27th September and also 25th of October will be the last two sessions for this year. So please remember to register as soon as possible because it will be the last session for this year for Malay session on 27th of September, and for 25th of October, it will be an English session, will be the last session for this year as well. Now, every session, we are going to open to 120 to register, and on the day itself, we only accept the first 50 online attendees. So please register as soon as you can, and please make sure that you can attend, then only you register. If not, you're going to take up other people's space because many of the classes are fully registered and we need to close the registration earlier than the event's date itself. So you can take a photo, similar things, you can take a photo or else you can copy the link in the chat box and later you can register accordingly. And please share it with your friends as well. Now I'm going to start with my session for this evening. Before I start, as usual, I need to do a disclaimer. This topic is meant for education purposes. There's no buy or sell call. Please allow me a very quick introduction because I have a lot of topics to cover this evening. So just run through a quick one. My name is Ting Ting. Please do not doubt about my name because this is exactly as per my IC. And if you do not know how to type my name, you can just type in TYNG, or even TNG. I'm fine with that. Don't worry about it. Now, my forte is in trading and investing. Since day one, I'm in this industry, already involved in trading and investing. I'm currently in the industry for near to 20 years. And right now, I'm an approved speaker under Bursa Malaysia and also CB speaker for SIDC. We provide training and coaching for those fund managers, remisier, research analysts, and futures brokers. Now, for those who are going to jumpstart in your stocks and futures trading, this book is meant for you because I write it purposely for Malaysian. If you're going to kickstart, you can grab a copy. The title is Jumpstart in Stocks and Futures Trading. And with our own readers and followers, we managed to clinch the national bestseller investment book in less than half a year. Not only at bookstores level, but at national level. Now, before I continue, let me check with you how many of you are currently trading in futures. If you're currently trading in futures, it doesn't matter which products that you are trading. Can you please just type in the number of years that you are currently trading? If you need to get yourself started in futures trading, you just need to type in 0. I repeat, for those who are able to kickstart, for those who already started your futures trading, can you please just let me know how many years you have been currently trading? If you're trading for 3 years, you just type in 3. If you're trading for 2 months, you just type in 0.2. If you not yet get yourself started in futures trading, can you please just type in 0? Wow, this class, a lot of beginners. How about the rest? Oh, all of you not yet get yourself started in futures. Is it? All of you? Seriously? No one started in futures trading. Well, I have a lot of work to do for this evening with that. Okay, now you can still continue to type in. Later, I'm going to ask you further questions and we shall see. I never expect that this is the class for those who do not have experience. So the topics that I cover, majority of it, I'm going to cover for those who have experience, but I will try to explain more for those basic topics as well. Now, for this evening, I'm going to cover 4 different sessions. The first topic is what you need to know about SSF. And the second topic is we are going to cover the 3 essentials for beginners. Initially, for these particular subtopics, I'm going to run through only because I expect many of you have futures background. But with that, maybe I need to explain slightly more. And subsequent topics is we're going to cover 4 powerful reasons to consider SSF, which is your single stock futures. And the final topics, I'm going to share with you some trading strategies for this SSF. So you are going to learn some trading strategies and trading ideas that you can apply for your single stock futures. These particular topics, as you can see, we have 2 words. One is stocks, one is futures. Basically, we are mixing both products. With that, I cannot assume that you have either stocks background or you have futures background. I will try to cover both products as basic as I can. Now, let's say if I did not cover any ideas that you would like to know, you can check with me via the Slido at any point in time. Now, before I start with the first topic, let me check with you your current status. This is slightly different from the question that I'm going to ask you just now. Are you currently trading futures? If you can type in 1 if yes, and actively trading. 2, you can type in 2 if yes, but only occasionally. You can type in 3, no, but I'm interested. You can type in 4, no, and I'm not familiar with futures. Now, let me know what is your current situation. 1, 2, 3, 4. Which one is the better one to represent your current situation? Oh, I see many 3. You all really surprised me. We have 4, 2, a few of you, some of you have 1, 2, but majority of you 3. Some of you fall into 4. Okay, don't worry. Now, just let you understand this particular topic. Initially, when I prepare the slides, I am expecting that you have some basic knowledge for futures. So I don't go in details about futures itself. I'll run through some of the ideas, but I will not go into details of it. So let's say if you have some of the ideas that you couldn't understand, there's one of the fastest way is I strongly encourage you to join the LF online workshop, because the LF online workshop is going to allow you to understand all basic about futures and how do you start with your futures trading. Clear? But you are allowed to ask any question. It doesn't matter, very basic question or very difficult question. Now, let me start with the first topic about what you need to know about SSF. Before you understand what is SSF, let us take 2 steps backwards. One step is towards futures, another step backwards will be towards derivative. Because before we need to understand what is single stock futures, we need to understand what is futures. And before we understand futures, we need to understand what is derivative. Now, let me ask you a very simple layman question. How do you derive into this world? Now, please do not tell me that you derive from the stone, yeah? So basically for us, we derive from our parents. Am I correct? Our parents, they are the underlying asset and we are the derivative products. I repeat, because we derive from our parents. So our parents, they are the underlying asset and we are the derivative products. And without our parents, we are nobody. So for example, we will inherit my parents' characters. Like if they are very hot-tempered, I tend to be very hot-tempered as well. So without our parents, we are nobody. So we are the derivative products. Later, I'm going to explain to you in details about this particular part. But at the first things that you need to understand is about this derivative. Now, once you understand about derivative, the next things that you need to know is there are 4 common derivative instruments, namely futures contract, forward contracts, option contracts, and also swap contracts. Now, for today's context, we are going to focus in terms of futures contract because single stock futures is fall under futures contract. Now, what is exactly a futures? I'm not going to go through everything, but Mainly, if you want to understand what is futures, you just need to understand from these 5 areas. The first one is the definition. The second one is the terminologies, those commonly being used. Trust me, these all terminologies is less than 10. Once you understand all the terminologies, you'll find futures compared to stocks. It is even more easy compared to your stocks trading. And the third one, what are the products available under Bursa Malaysia Derivative? What are the products that you can trade besides single stock futures? And the fourth will be the underlying market. We need to know their parents, because their parents, the movement of the parents will affect us as a derivative products or a futures products. And the last one is the contract specification. I know if you first glance, you're going to see that there are a lot of jargons, but don't worry, later I'm going to use layman terms to explain to you. Now, these are all the products available under Bursa Malaysia Derivative. You can see that we are going to separate into different areas, and we have about 20 products in under Bursa Malaysia Derivative. Not only futures, we have option as well. In this world, anything can be a futures products. For example, let's say one day if iPhone is very famous and a lot of people, they are trading iPhone, we can have an iPhone futures as well. Anything, whether we have weather futures, we have even orange juice futures, etc. We have many things that you have a futures product. So anything can be a futures products. But our focus for today, we are going to focus in terms of single stock futures, which is your SSF. Now, the underlying market, like what I mentioned to you, this is the parents. We need to understand the movement of the parents, the characteristics of the parents, because they are going to affect us as a derivative products. Your left-hand side, these are all the futures products in Malaysia, especially if you can see the first 3, they are under the stock market itself. And this is the parents, which is your underlying products. For example, for single stock futures, we derive from the selected individual stocks traded in the stock market. So from the stocks itself, we have these single stock futures. And what you can see about FBM KLCI, we have the futures products as well, which is the FKLI. Like for example, your FBM KLCI, like let's say for example, today we close at 1470. So this is your composite index. At the same time, we have our futures products as well. So for those who are familiar with crude palm oil, you can see that the underlying products is the crude palm oil, your CPO, and the futures is your FCPO. Now, our focus for today will be mainly on this, your single stock futures. What are the main differences between stocks and futures? I'm not going to cover every areas, but I'm going to cover those very outstanding part or the main differences in between stocks and futures. Now, first, the categories of ownership for stocks. Basically, we don't want to cover in details like using margin or not the direct account, etc. But we go as general. If you are buying shares, basically you have the ownership. You own the stocks itself. You are the shareholders for the company. But if you are buying SSF, which is your single stock futures, you don't own the stocks. Basically, you just own a contract, a futures contract. Now, in terms of leverage, I know that this is another jargon, but don't worry, later we are going to cover in details about these terms, this word itself. For leverage, at this moment, you can interpret as you're using a small figures of money, but there's a potential for a big return. So your initial capital will be small. So this is what we call as leverage for stocks. Basically, we do not have, but for single stock futures, you're going to see that you have a lot of leverage involved when it comes to single stock futures. And for selling position or short position, for stocks, we are very limited because I know that you're going to mention that we have regulated short selling, which is your RSS. We have intraday short selling, which is your IDSS. But these are very limited stocks applicable, and there are still a lot of rules that you are bound to. But when it comes to futures, when it comes to selling, they are very direct and very easy to use, which later I'll explain about this. So these are all the main differences between stocks and futures. These are all the 30 tradable stocks as of today. For example, I hope that you can see this. I screenshot the whole list, but later I will let you know where you can find the whole list. And for example, you can see that Axiata Group, the F stands for futures and FAXI. So this is the short code for your futures itself. Like for example, CIMB, FCIG, IOI Corporation Berhad, FIOI. You have your Maxis Berhad, FMAX. So these are all the 30 tradable SSF as of 2nd of September. I'm going to enlarge this and I'm going to only select 10 stocks for you to have a clearer look. For example, Maybank, I believe all of us know which bank is it. So the contract code will be FMBB. Your QL Resources, your QL, for example, is FQRR. Your Tenaga Nasional Berhad will be your FTNB and the rest. You can see that these are all the 30 tradable SSF. Compared to the previous, if you understand this is a relaunch for this SSF, previous contract specification only included 10 tradable SSF. Right now, they already expanded to this 30 SSF. So these are all the lists. Now, contract specification. What is contract specification? I know there's another jargons, but this contract specification, layman terms, is like a user manual. I repeat, this layman terms is like a user manual. For example, if I bought this phone, I do not know how to use the phone. First thing what I do, I'll go and check the user manual. Am I correct? I know nowadays, younger generation, it tends to go for YouTube, you go for Google search, right? You don't read the user manual, but I'm older generation. I tend to read the user manual. But normally, all the products, the user manual is very thick. But for this contract specification, on average, they are half a page of A4 size only. Seriously, only half a page. So it's very short. Before you want to trade any futures products, you just need to read the contract specification. They will let you know, like for example, my phone, how big is it, what is the spec, etc. So similar things. For my futures contract, they will let me know what is the product itself, what is the trading hours, what is the contract size, etc. So this contract specification, or sometimes we call it as contract spec, would define what is exactly these futures products all about. Now, since today we are going to have a single stock futures, I am going to show you how can you get this contract specification for this SSF. What you need to do is you just need to go to bursa.malaysia.com, then you go to trade and you go to derivative. I repeat, you go to Bursa Malaysia, you go to trade, you go to derivative. They are all the products with all the contract specification listed there. You can download the contract spec and read it by yourself. Now, I'm going to give you a very quick 2 seconds. You can screenshot or you can take a photo. Later, go and find the contract specification and read it. I repeat, you go and find all the contract specification and read it. Very simple only. I'm going to show you in the subsequent slides one of the example. How can you go through, or how do you read, or how do you understand this contract specification? Done? Now, this is the contract specification for your single stock futures. Very short, am I correct? A few wordings only. Now, the contract is single stock futures. The contract code is SSF. And the parents, can you see the underlying instrument is the selected single stocks, and the contract size follow very closely to your bought lots in stocks. Like for example, previously your bought lots for stocks is 1,000 shares, and right now it's only 100 shares. For these single stock futures also previously when they launched it, also representing 1,000 shares. Right now, when they relaunch, it's representing 100 shares. So this contract size is fixed. meaning every contract that you buy, you're buying 100 shares, already fixed. What is this contract size meaning is like, for example, let's say you walk into a stationery shop, you want to buy a pen. Now, some of the stationery shops, they are going to sell you piece by piece. But some of the stationery shops, they tell you that we are going to sell in bulk. Minimum purchase one box, let's say 24 pieces. Then you need to buy 24 pieces of your pen. So it depends. But this contract size currently is being fixed at 100 shares, meaning every contract that you buy, you're holding 100 shares. Now, I'm going to skip those not so relevant or require a lot of explanation. You can read it by yourself. But one thing to highlight, contract months, just in case you do not understand, like what I said, you can go and join the LF online workshop. We are going to explain more details. Now, these contract months, meaning that the month that you are able to trade or those months available for you to trade. The first thing is your spot month. We have 4 months. Every time 4 months available for you to trade. Spot month meaning the current month. Then the next month, subsequent month, and the next 2 calendar quarterly month. Calendar quarterly month meaning your March, June, September, and December. So if based on the contract months, our current month, right now, this month is what? September. So right now we have September. The next month is October, and the next 2 calendar quarterly month will be your December and March next year. So for today, as of today, we can trade September, October, December, and next year March. These are the 4 contract months available for you to trade. Now for the trading hours, it's quite similar to your stock market. One thing very different is for futures market, we tend to open 15 minutes earlier and we close 15 minutes later. Because futures traders, we are more hardworking. That's why you can see that we are 15 minutes earlier and close 15 minutes later. Now, the main reasons for this is because one of the usage of futures is meant for hedging. That's why hedging, we need to open 15 minutes earlier and close 15 minutes later compared to your underlying, which is your stock market, so that you have the opportunity to hedge. And the afternoon trading session, we open at the same time at 2:30, but again, we are going to close 15 minutes later, which is at 5:15. The next most important thing is the minimum price fluctuation. Currently is at $2, which is 2 cents. Later, I'm going to show you a side-by-side comparison between stocks and also futures. And the final trading days will be the last business day. For example, for September contracts, we can trade all the way until the last trading days, let's say on 30th of September, if it is not a public holiday or a weekend, then this will be the last day. If I'm holding a December contract, I can trade until 31st of December. So that would be the last day for me to trade the contract. But don't worry about it. As you can understand, futures, if you want to hold very long, you can hold as well. If you want to hold very short, you can hold for very short. For example, I can buy at this moment, I'm going to sell next minute. I can buy now, sell next hour. I can buy today, sell tomorrow. I can buy today, sell next month. I can buy today, sell next year. I can do that as well. So this expiration is just a minor things which you just need to renew your contract. Now, the final settlement will be a cash settlement, meaning it doesn't involve any delivery of your physical. Let's say, for example, if today I'm trading a futures contract for iPhone, it depends on the final settlement. If we say that I need to deliver the iPhone, then when the contract expired, I need to deliver the iPhone. But if it mentioned that it's a cash settlement, any differences, you just need to pay by cash or you're going to receive the cash. So these are all the important concepts about this contract specification. By now, more or less, you will understand the basic concept. Later, I'm going to go into the details part. Now, the last part regarding this contract specification is about the minimum price fluctuation. If you understand for your stocks, for example, if your stock price is between $1 to $9.99, every time when the market moves, it must be moved by 1 cent. You cannot be half a cent. It must be minimum 1 cent. If your stocks is from $10 to $99.98, every time when the market moves, it needs to move by 2 cents. It cannot move by 1 cent. But for SSF, it has been standardized by the minimum price fluctuation will be 2 cents. And if it times with 100 shares, because every contract representing 100 shares, it will be $2 per contract. So unlike the stocks, you can see that different price of your stocks, the stock price, different categories, the minimum price fluctuation will be different. But for SSF, it is standardized across the board. Now, why learn SSF now, as per now? First, Bursa Malaysia Derivatives, we launched this SSF this year itself, and they perfect some of the features. They provide you with more features, like just now I mentioned to you previously, is 1,000 shares. Right now, each contract is representing 100 shares. And for example, for the stocks, the tradable stocks, they already increased to 30 tradable stocks. So you're going to see that better features in many of the aspects. And the second things like just now I mentioned to you, more stocks available for you to trade. Basically, those popular stocks or those index-related stocks, they make it available for you to trade via these single stock futures. Now, the last one is the opportunity in volatile market condition. If you know, especially this year onwards, our market condition, they are very volatile. So volatility will create a lot of opportunities, especially when it comes to single stock futures. So this is definitely the right time for you to start to understand what is these single stock futures. Now, we're going to move into the second topics about 3 essential for beginners. Now, this topic is mainly for beginners. For those, if you have experience, just take it as a revision. Bear with me. Later, I'm going to go into the trading strategies and trading ideas. But before that, we need to cover some ideas so that some of them who do not have experience in futures, which just now I noticed that majority of you do not have ideas or experience in futures. So I'm going to cover these 3 essential for beginners. If you're beginners, once you understand about these 3 essential, basically you understand what is futures. Now, the first is how to buy and sell. Let me show you this very simple concept. Bullish market or uptrend, you can long. For futures, the terms we use is long, or you use the terms buy, interchangeable. Don't worry about it. And during a downtrend or a bearish market, you can short for futures terms, or you can sell, interchangeable as well. So you can use the term short, or you can use the term sell. The concept is very simple: buy low, sell high, or you can start by selling high, buy back at a lower price. So this is the common concept. Anything we want to buy, we try to buy at a lower price. And when we want to sell, we try to sell at the highest level. This table will help you to understand how do you open a contract and how do you close a contract. For example, I start by opening a futures contract, which is a buy position. Eventually, how can I close this position? I just need to sell my futures contract. Now, if you start by selling a futures contract, and eventually, how do you close your futures contract? You can buy back your futures contract. And this diagram shows you clearly how do you buy and sell. For example, if you anticipate the market is going to go higher, you can start to buy at a lower price, and eventually when the market went up, you can close your position by selling a futures contract. Now, another scenario is if you anticipate the market is going to drop, you can start by selling a futures contract, and eventually when the market drop, you can close your position and take your profit by buying a futures contract. Very simple diagram for you to understand. So for us, futures contract, if you want to sell, you just need to sell directly. You do not need to worry. You do not need to borrow anything. You just execute a sell position. Later, I'm going to show it to you. Now, buy or sell FYTC. YTC is your YTL futures contract. If YTL is expected to distribute a historical high dividend, now let me know, should you buy or should you sell FYTC? Can you please just type in the chat box? Just give it a try. It doesn't matter whether right or wrong. Very good. Okay, I see many answers. Any different answers? Any question, right? Please ask in the Slido. Later, I'm going to cover your question at the end of the session. Because I saw just now there's one question pop up right in the chat box. Yes, the answer is correct. You're going to buy FYTC because if you're expecting them to distribute a historical high dividend, meaning the stock price is expected to go higher because more people is going to buy into the stocks. With that, your futures will follow in tandem as well. Majority of the time, futures is the underlying, is the derivative products for the stocks. So the movement for the underlying, which is the stocks, will affect our futures price as well. How do you buy and sell? Very simple. If you know how to buy and sell for your stocks, for futures trading, they are the same. It's just that one thing very different is you're allowed to start by selling a futures contract. How do you sell? You just need to click sell. You do not need to own any futures position. You can directly start by selling a futures contract. Now, the second very important things that you need to know about futures is how do you calculate your profit and loss. First thing you need to understand, bullish uptrend, you long or buy, bearish downtrend, you short or sell. Buy low, sell high. Or start by selling, you need to sell high, buy low. So long as you fulfill this requirement, you are having a profit. Anything opposite of this, like for example, buy high, sell low, or sell low, buy high, you are going to have a loss. Now, let me check with you one very simple question. Let's say on 2nd of March, you bought one contract of YTL futures at $2.20 because it is forecasted to rise to $3.50. On 29th of March, you sold one contract of YTL futures at $2.50. Can you please let me know, is a profit, is a loss, and how much? Still remember just now when you buy one futures contract, the contract size is representing how many stocks? 100 stocks. So please calculate for me, is it a profit, a loss, and how much? Okay, I saw some answers. How about the rest? I give you a quick 10 seconds. Try to give me an answers. It doesn't matter if it's right or wrong. Just give it a try. Even you answer wrongly, you can learn better. If you can understand and answer correctly, it will help your memory as well. Very good, a profit. But maybe for those who are giving me the profit, can you calculate in details how much is it? Now, first thing, the difference in between these two is 30 cents. But don't forget, can you see one contract? One contract is representing 100 shares. So what you need to do is to take the 30 cents times with 100. And the second part that you need to know is because you buy at a lower price and you sell at a higher price, you fulfill the requirement of buy low, sell high, so you're having a profit. So the profit of one contract at 30 cents will be you take the 30 cents times with 100 shares. So exactly the answer will be 30 ringgit Malaysia if you are buying only one contracts. So for those who answer wrongly, don't worry, because I saw some of you answer me 30 cents, some of you answer me 300, but it doesn't matter. At least you give it a try and you will understand better how to calculate this. Remember, why you need the times with 100 shares is because each contract, the contract size based on your contract specification already stated that every single stock's futures representing 100 shares. So when you buy one contract, you're buying 100 shares. So if you buy 10 contracts, you're buying 1,000 shares. Clear? Now, the second example is related to short. Let's say, for example, on 2nd April, you sold one contract of YTL futures at $2.50 after a bearish technical signal. And on the 29th of April, you bought one contract of YTL futures at $2.20. So in this case, you started by selling because you anticipate the stock price will drop. You're allowed to sell directly. You do not need to borrow. You do not need to wait. You can just sell it. So in this case, can you please let me know is a profit or a loss and how much? I'm going to give you another 10 seconds for you to calculate and give me your answer in the chat box. Or some of you very fast already see your answers. Very good. I saw some of your answers, but I'm not quite sure whether is it correct or not. Maybe I'm going to wait for the rest of the answers. Very good. Yes, correct. So similar with the previous, the differences is 30 cents and we sell at a higher level, higher price. And eventually we buy back or we bought it at a lower price. So this fulfill the norm, which is sell high, buy low, you're having a profit. So the profit of 30 cents, the same thing, you need to times with 100 shares because one contract. So you're going to have a 30 ringgit Malaysia of profit. Very good. Give yourself a big hand of applause. Now, the final concept that's very important when it comes to futures is about initial margin. Now, I know many of you have stock backgrounds, but you do not have single stock futures background. Let me highlight to you one thing that is very much different in between futures and stocks. Similar things that you saw these terms margin in both stocks and futures, but they are representing two different things. For your stocks, margin is basically you're borrowing money from the investment banks or your brokers itself. But when it comes to futures, this margin is representing your deposit. I repeat, when it comes to futures, the margin, the terms itself is representing deposit. Unlike your stocks, the margin itself is representing you are like borrowing from the brokers itself to own the stocks. So it's very different. Please do not mix this up. If not, subsequently, it's very difficult for you to understand the whole concept. So I repeat, this margin for futures itself, layman terms, is a deposit. So before you want to trade any futures contract, you need to bank in this deposit for you to own the futures contract. And this futures contract, it doesn't matter the price, we are going to have a fixed margin being allocated. So you just need to bank in this margin and you can start to trade, buy or sell your futures contract. For margin itself, mainly we divided into two areas. One is initial margin, one is variation margin. But because of time limitation, I'm going to focus in terms of initial margin. For example, these are one of the example, the initial margin. Can you see that? Now, this initial margin, like what I say, is a deposit. Let's say, for example, you are going to buy Maybank shares. If you are going to round it up to $10 for these Maybank shares, if I'm going to buy 100 shares, how much do you need to pay? If right now the share price is $10, if you are going to buy 100 shares, that is equivalent to 1,000 ringgit Malaysia. Am I correct? But for single stock futures, you do not need to pay this 1,000 ringgit Malaysia. You just need to pay this initial margin, which is 60 ringgit Malaysia. You can own the similar number of shares like in your stock market. Clear? So this is the current initial margin as of today. So for example, I give you another example like your Nestle. If I try to round it up to $100 per shares, and let's say if you're going to own 100 shares, which is equivalent to one contract. So if you're going to own 100 shares, basically you need to fork out your initial capital of 10,000. But if you're going to use or to own the similar number of shares, which is 100 shares, for single stock futures, you just need to bank in 1,650. You can see the fraction or not is like about 16% of it. So you do not need to pay the full sum. So this is the concept. It doesn't matter what price currently this stock is trading. You just need to pay the initial margin. So you pay the deposit, then you can own the stocks. So these are all the examples like QL Resources. Currently, the initial margin is only 30 ringgit Malaysia. Like if you are going to round it downwards for QL, let's say right now the stock price is like $4. If you own 100 shares, that is 400 ringgit Malaysia. But for single stock futures, you just need to pay 30 ringgit Malaysia. Own a similar number of shares. Can you see? And vice versa for the rest of the stocks. Some even very low, like IOI Corporation is 20, your 99 Speedmart is only 20 ringgit Malaysia. And this is updated as per 2nd of September. Sometimes Bursa Malaysia will change this initial margin if the market volatility is high or we have a long public holiday, etc. But if not, if nothing happens for the market itself, the initial margin would not be changed. I give you some example. Let's say this is all the initial margin for respective single stock futures, like for your Maybank, your Sunway, your QL, your IOI. Let's say I deposited 6,000 in my trading account. If I'm going to buy only Maybank single stock futures, which is the Maybank futures itself, can you please let me know how many contracts can I buy with 6,000? So the concept is like, for example, today I have $10 in my pocket. If I'm going to buy nasi lemak, each pack of nasi lemak costs me 2 ringgit Malaysia. How many packets of nasi lemak can I buy? So let me ask you this question. If I'm having 6,000 in my trading account and I'm only going to buy MBB, which is your Maybank futures, how many contracts can I buy? Help me to calculate and please type in your answer. Oh, very good. All first one answer 100 contracts. I'm not quite sure. Zhenhua 100 contracts. TK 100 contracts. How about the rest? Do you have different answers? D 100 contracts. Very good. Yes, the answer is 100 contracts. You take 6,000 divided by 60 because the margin requires only 60, meaning with the initial capital of 6,000, you can own 100 contracts, which is representing, if you take 100 times 100 shares for each contract, which is representing you can own 10,000 shares of Maybank stocks. Can you see that? Now, I give you another example because this one is the same 60. How about QL? If you're going to buy only QL, which is your QL Resources, if you're going to buy these QL stocks with 6,000, how many contracts can you own? Simple, right? This is half of this. So you're going to see that 6,000, if you bang in, you can own 200 contracts for QL. If you take this 200 times with 100, meaning that you can own 20,000 shares worth of QL with 6,000 only. Simple, right? But when you bang in this 6,000, does it mean that you can only trade FMBB? No. You can trade any single stock futures contract and even other futures products like your FKI, your FCPO, your FGLD, your FM70, so long it's within your capital required. Clear? You can have any combination. These are all the trading phases. A bit complicated, but your focus needs to be on those highlighted in red color only. These are the actual trading hours. Now, 2 sessions that you need to know. One is 30 minutes before the market open. We have this called pre-opening stage. So during these 30 minutes, you can start to place your orders, but none of your orders will be traded. Another session, very important, is we have this 30 seconds of non-cancellation phase. Yes, you did not see it wrongly. This is 30 seconds. During these 30 seconds of non-cancellation stage, you cannot cancel those orders that you already placed. You cannot modify those orders that you have placed, but you can still continue to submit your orders for these 30 seconds only. There's a reason behind. If there's any opportunity, I'll explain to you. Then we start with the class, we start with the trading session at 8:45 until 12:45. Now, afternoon session, the same thing. We start at 2:30. So before that, 30 minutes will be the pre-opening stage, and 30 seconds will be the non-cancellation phase from 2:30 until 5:15. Similar things for SSF. Anything related to stock market, you can see that they follow the same trading phases. SSF similar to your FKI, FM70, and F4GM. The only difference that you need to take note is we do not have a night trading session for your single stock futures because your stock market is not opening at night. With that, single stock futures is not trading as well. So this is the only difference. You can see here it's not applicable. So we only have 2 trading sessions, morning and also afternoon. So these are all the trading phases. You can take a photo or you can print screen. Later, you can refer to it. Now, if you do not want to memorize these all trading phases, the simplest way is you just trade during the normal trading hours. 8:45 to 12:45, 2:30 to 5:15. Now, stocks or single stock futures. Let me show you a main difference between these single stock futures and also stocks. Suppose YTL is trading at $2 per share. Your capital is 1,000. So with that, if you're going for your stock trading, you can own 500 shares. So because 500 shares times 2 ringgit Malaysia, that is equivalent to 1,000 of your capital. Now, but when it comes to single stock futures, still remember just now the FYTC, the margin, which is the deposit required, is only 40 ringgit Malaysia. So with that, you can see that with 40 ringgit Malaysia, if I have a capital 1,000, in fact, I can trade up to 25 contracts. So I take 25 contracts times 40 ringgit Malaysia, that's only equivalent to my 1,000 capital. And 25 contract, which is equivalent to 2,500 shares. The difference here. So another way is if you want to have the same exposure of the number of shares, you can go with 500 shares, which is only representing 5 single stock futures contract. You times 40, that is 200 only. And with that, can you see clearer? Here, in terms of number of shares, the same initial capital or the same capital you have allocated. For stocks, you can only own 500 shares, but for futures, single stock futures, you can own 2,500 shares. With that, you're going to see that your number of shares is higher, like 5 times. Eventually, if you're having a profit, your profit will be higher by 5 times as well. And the initial capital that you need to allocate, basically, if you are going to have the same exposure of 500 shares, which is only 200, this is 5 times below the original required. So single stock futures give you a lot of advantage if you're going to see from this particular example itself. Now, coming to the third topic, 4 powerful reasons to consider SSF before we move into the last topic about the trading strategies and trading ideas that you can use in the current single stocks futures. First, before I continue, let me check with you this simple question. Which products are you currently trading? A, if you are currently trading stocks, you just type in A. If you are currently trading futures, just type in B. If you are currently trading ETFs, you just type in C. If you are currently trading option, you type in D. If you are having a combination of stocks and ETF, you just type in AC. If you are having a combination of futures and option, you just type in BD. Let me know which products are you currently trading? Okay. So today we have a lot of you coming from the background of stocks trading. Understand. For those, again, just final reminder for those who are having experience in stock trading, seriously encourage you to consider to attend the Let's Learn Futures online workshop, because that particular workshop, we are going to handhold you from A to Z related to futures, anything that you need to understand about futures until you are able to start with your futures trading. So single stock futures also fall under futures trading. And once you understand how to trade futures, basically you will know how to trade single stock futures as well. So you can go and register and go and attend. Like what I said just now, for the September class, the Malay class is the last class for this year. And the October class for English class will be the last class for this year. So I strongly encourage you to go and join. Now, it doesn't matter which products that you are trading. Right now, I'm going to let you see and compare. When it comes to single stock futures, compared to the rest of the products, like for example, especially stocks, what are the advantages compared, especially for those who are involving in only stocks trading? Now, the first advantage is profit opportunities in both rising and falling market. This is definitely, you can see that, for example, for your YTL, in less than 6 months, YTL surged $2.05, which is equivalent to 110%. And if you are taking $2.05 times 100, which is only representing one futures contract, you already make 205 ringgit Malaysia. There's only one futures contract. Basically, you don't own only one futures contract. Am I correct? And this is during an uptrend. Quite similar to your stock market, but the other side. Let's look at the other side. When during a downtrend, same stocks again, less than 6 months. Quite similar to the uptrend itself, less than 6 months, YTL dropped $2.21, which is equivalent to 56%. And if you take this 221 times with 100, that's representing 221 profit for one contract only, if you are owning one contract. And this one cycle, if this uptrend and downtrend we consider as one cycle, for this particular market, if in stock market, you only have one trading opportunity, which is during the uptrend. But for futures, which is your single stock futures, you have 2 trading opportunity for this whole cycle. Uptrend, you can trade. Downtrend, you can trade as well. And during a downtrend, you can still make money in a futures market, which is your single stock futures. So your opportunity increase because one complete cycles, you have both direction that you can trade. So if uptrend is one opportunity, downtrend is one opportunity, you have 2 trading opportunities. Unlike your stocks market, this complete one cycles, you only have one trading opportunity. Now, the second advantage will be lower trading costs. For example, if you're going to compare this YTL and FYTC, which is your futures, stock price, the same $2.40, the lot will be the same, and the units will be the same, 100 shares, your position values, they are the same, 240, the same. Your position also buy and long, they are the same, but the highlight will be here. First is your margin, which is your upfront or your deposit. For your shares, basically you need to pay in full, which is 240 ringgit Malaysia. I use a very small amount to easy for you to understand. And for futures, you just need to pay 40 ringgit Malaysia. Can you see this is 240? This is 40 ringgit Malaysia. So your initial capital is way lower compared to if you're doing in stock market. And in terms of transaction fees also for shares will be higher because let's say for example, many of the brokers, they charge you a minimum cost. If you did not fulfill certain number of shares, they have certain minimum cost to charge you as well. So if you added the rest, it's about $12 per side, but for futures, it's about $7 per side. Now, and this relaunch, Bursa Malaysia Derivative, you can see that they reduce the exchange and clearing fees. For futures, we have three parts. To combine for your commission, we have your exchange fees, we have your clearing fees, we have your brokerage, which is charged by broking house. So from the exchange perspective, previously the exchange fees is 4 ringgit Malaysia. Right now they already reduced to 1 ringgit Malaysia per contract. And your clearing fees is also 1 ringgit Malaysia. So right now they maintain 1 ringgit Malaysia. So your exchange plus clearing fees is about $2 only. And plus your brokerage. So plus minus is about $7 or $8 per side. Relatively, for futures trading, normally with one tick, you'll be able to cover your costs. But for stocks, it is harder within one tick for you to cover your costs. Now, before I move into the third advantage, I'm going to highlight this question before I continue with the third advantage. Have you ever used leverage in your trading? Whether you understand, you don't understand, it's okay. Now, yes, you type in 1, or some of you already type in. Now, no, but I understand how it works. Number 2, you type in 2. The third option is no, and I'm unsure how it works, meaning you don't really understand how leverage works. You just type in number 3. So let me know what is your current situation, 1, 2, or 3. Some of you 3, some of you 1. A lot of you also quite understand. Some of you have no idea. Don't worry about this leverage. Later, I'm going to explain to you. That's the reason why I highlight this question first, or I raise this question, so that later I'll explain to you. For those who are using, very good. But if you do not know how to use it, let me show you the power of this leverage itself. Now, the third advantage is what we call as low capital. It's related to your leverage. What is leverage? Leverage meaning that if you look at this particular image, you will understand that you put in one coin. Let's say we represent this deposit as one coin only. But you have an opportunity by using only one coin, you can make a lot of the coins. So this is the concept about it. Meaning you are going to use a small capital. There's an opportunity for you to make a huge return. So this is what we call it as a leverage. Now, let me show you the actual example. Again, we go back to this YTL Corporation, your YTL stocks. To trade one lot of 100 shares of YTL shares, for example, if currently the stock price we round it up to $2.40 times 100 shares, that is equivalent to 240. So if you want to buy stocks, 100 shares, you need to deposit 240 to own the stocks. But for you to trade futures, this single stock futures with the similar 100 shares, in this case, you just need to put a deposit of 40. So let's say subsequently, if you are going to make a return, your return will be higher as well. So first thing for you to understand is, you can see that the capital required with the same number of shares that you are going to basically own, but the initial capital is lower for single stock futures. There's like a fraction of it only, 1/6 of it, very low compared to that. Meaning if you're owning 100 shares with a similar deposit, right, basically you can own 6 contracts, which is 600 shares. Same initial capital. So this is the third advantage. And the final advantage is definitely, the highlights of it is SSF makes short selling easier than stocks. Now, this is the Simple table summarize everything that you need to know. Starting with the features of share borrowing required for SSF. Remember, if you want to sell, if you want to short, you do not need to borrow. So for SSF, you don't need to. Let me get my cursor up. For SSF, you do not need to. For RSS, you need to borrow the share before you can short sell. Now, for upfront cost, for SSF, it's relatively low, but for RSS or IDSS will be higher. Now, same day buyback require SSF, you don't need to. Like what I say, you can hold as long as you want. Even you're holding a short position, unlike your intraday short selling, you need to close within the day itself. But for futures, once you sell it, you do not need to hold, or you're not bound to being restricted to hold within the day. You can hold as long as you want. Let's say 1 day, 1 month, 1 year. You can do that. And the next one will be shorting availability. For SSF, always you have. For RSS, IDSS, limited. Certain stocks, you are limited. And before you can short, you also need to borrow. There are a lot of rules that bounce by it. By the way, just in case you do not know, RSS is regulated short selling. IDSS is intraday short selling. This one is in the stock market. So intraday short selling is only limited to the day, and RSS, basically you need to borrow the shares before you can short. And the last one is borrowing fees. For SSF, if you short, meaning if you sell, you do not need to have any borrowing fees. You are allowed to sell, like just now I mentioned to you, you do not need to borrow. That's the reason why you do not need to pay these borrowing fees. But for RSS, there's borrowing fees involved, and for stock market, it's relatively high for you to borrow the shares for short selling purposes. So these are the 4 advantages that you need to know. For more details and information, what you can do is you take a photo and you scan this QR code, and all the information related to your single stock futures, you can read it in details related to that. This is under Bursa Malaysia website. You can take a photo and later you can scan and for more details. Now, who should use this SSF? Investor looking to hedge their stocks holding. Second one is traders seeking leverage and flexibility. Also, definitely later I'm going to cover more in details. And the last one, those who want to profit in a falling market, especially, which is very hard for you to do in stock market. So for those who want to profit in a falling market, SSF is definitely for you. Now, we're going to move into the last session, which is our focus for today. What are the trading strategies that you can use? I'm going to give you some simple trading strategies and ideas. I'm not going to go for those very complex trading strategies and ideas like arbitrage, pair trading, etc. So I'm going to give you 4 simple trading strategies and ideas which you can apply in your single stock futures trading. Now, the first trading strategies and idea is the directional strategies. Now, this directional strategy is very simple, meaning you can apply your technical analysis or you can apply your fundamental analysis before you want to buy stocks or sell stocks. And it based on whether you have a bullish outlook or a bearish outlook, which later I'm going to share with you. And with that, like for example, if you're using technical analysis, you can use your RSI, let's say overbought, oversold, or you can go with your mean reversion. These are all the examples that you can use for your directional strategies. I'm going to give you some example here. For example, if stocks expected to rise, meaning you have a bullish market outlook, your action, definitely you're going to buy your stocks. So in single stock futures, you can go and long, or you use buy also, interchangeable. So example, you're going to buy FYTC at $2.20. Eventually, you sold it at $2.50. So you're having a profit of 30 cents. So if you're holding 1 contract, meaning you're having a profit of 30 ringgit Malaysia. Now, if your stock's expected to fall, which is a bearish view, your action will be sell, your SSF position will be a short position. So let's say, for example, you sold FMBB, which is your Maybank shares, at $10. Eventually, you buy back at $8. You are having a profit of 2 ringgit Malaysia. So if you own one contract, that is representing 2 times 100, that's 200 ringgit Malaysia for one single stock futures contracts only. So this is the first trading strategies and also the first idea about directional strategy. Very simple. Now, the second idea, which is hedging strategies. Now, these hedging strategies, what does this mean? Later, I'm going to show it to you. But this hedging strategies is like your insurance. You're buying your insurance. Now, let me show you the first example. Let's say if my YTL stocks is expected to increase, the price is expected to move higher. So what will be the direction for my YTC futures contracts? Let me know. It will be higher or lower. This, your YTL stocks is moving higher. So remember, this is your underlying, which is your parents. As a kids, we are the derivative products. Definitely, we are going to move higher as well. It will be the similar direction. So when the stock price for YTL is expected to drop or they are trending lower, your FYTC will be trending lower as well. So let's say during an uptrend, your YTL stocks, you can make profit, no issue. But during YTL stocks, when they retrace, you are expected to suffer a loss in your stock market. But if you hedge it with futures, let's say, for example, you sell one contract at FYTC or you sell a few contracts at FYTC and you are going to make a profit because when the market downtrend, because you are selling, that's why you make a profit, let's say, for example, 2,000. Can you see this? Your futures is going to net off or going to offset your losses in stock market. So net, you're not going to have any profit or loss. So when it comes to hedging, your main objective is not going to make money, not going to make profit, but rather to protect your stock portfolio. Now, how do you hedge? I'm going to give you a simple formulas because we are retails. You don't need to go with the very complicated formulas like including your calculation for volatility. You need to understand your hedge ratio, etc. You don't need. You just go with the very simple formulas, easier for you to calculate how many contracts that you need to hedge. The formula is you're taking the stock's value divided by your stock price times with 100 shares because your contract size for futures, the bottom is your future side, which is your one contract is representing 100 shares. Now, with that, please help me to calculate this example. If you own 100,000 shares of YTL, currently trading at $2.50. Now, let me know how many contracts do you need to hedge following this formula. Now I'm going to show it to you. So it's 250,000 divided by $2.50 times 100. So basically, you just need to hedge with 1,000 contracts if you're owning 100 shares of YTL. So simple calculation. Now, when it comes to hedging strategies, let me highlight to you the important part. So when it comes to hedging, you just want to protect your downside. And when you're protecting your downside, without you need to liquidate your stocks, you can use single stock futures to hedge whatever stocks that you have. For example, if you are having, let's say you own Maybank stocks, and in short term, you're expecting some market volatility and towards downtrend, you can sell Maybank futures contracts to hedge against your stock itself. Let's say, for example, in this case, your stock price dropped to $2.10. Let's say you're holding YTL shares. If you go without hedging, you're going to suffer a loss of 300 because of your stocks itself. But if you do hedge by selling 10 FYTC, because 1,000 shares, one contract is only representing 100 shares. So we need to have 10 contracts. So your stocks, you suffered 300 loss. but your single stock futures, you gain 300. So net, you have no profit or loss. So with the hedging, it will help to net off your losses in stock market. Clear? Now, the third trading strategies and ideas is about leverage. This leverage strategies is very clear cut. Let's say, for example, you buy 100 shares of YTL. You can see that the capital use, first concept, you can see your capital use is 240 in stock market. But in futures market, you only use 40. So this is one of the way that you already use your leverage. And when the price increased by 20 cents, your profit is 20 ringgit Malaysia and your return will be 8.3%. You can see that you take 20 divided by your capital, which is your 240. But for your single stock futures, you can see that your return is 50% because your 20 profit divided by 40, that is 50%. So leverage is very powerful because it's going to magnifies your profit itself. This is the third trading strategies and ideas. And the last trading strategies and ideas, which is your event-driven strategies. You trade based on news and announcement, and especially when it comes to short-term market volatility or special events like your news and announcement, it will help. And especially for those sectors that is low correlation to your FBM KLCI, like for example, your healthcare sectors, your energy sectors, like your petchem, your petroleum chemical, this all is the best. So let's say, for example, your company announces strong earnings, the expected movement, the stock's likely to rise, so your SSF action will be a buy SSF. If your dividend declare higher than expected, your stocks may go up, so you also buy SSF. If negative news, like for example, scandals, downgrade, then you're going to see that your stocks may drop. In this case, you're going to sell SSF. This is very simple, based on events itself. Now, 4 ways to use SSF, like a pro, just a summaries for these 4 ways. First is your directional trading, like just now I mentioned to you, your hedging to protect your stock portfolio, your leverage, you're going to magnify your profit and also losses. And the last one will be events driven. Now, the final advice from me to you, these are the 5 common mistakes to avoid when you trade single stock futures. First is over leveraging. Please do not over leverage. Although, for example, if you're going to trade a single stock futures, you just need to pay 30 ringgit Malaysia or 40 ringgit Malaysia compared to the underlying, which is like 6 times or 10 times higher, but don't fully utilize it. Normally, my advice to you is at least 3 times of your existing margin required by Bursa Malaysia, depending on the stocks itself. But don't only prepare 1 time. Now, the second part is you treat SSF like stocks. Common mistakes. Many of you, when you started to trade single stock futures, but you still remember about stocks only, you forget about expiration. Don't forget single stock futures will expire, although you just need to renew to continue your contract, but sometimes you might forget about it because you just thought that it's stocks. Your liquidity, margin call, don't forget, because for single stock futures, you will have a margin call. Now, the third is overlooking contract specification, like for example, the settlement method, the expiry date, the trading hours. These are all compared to your stocks, they are different. So you need to really understand about this contract specification, which I already highlighted to you at the beginning of the session. I go through every section of it for this contract specification. Number 4, ignoring risk management. Please don't forget about it, because once you over leverage, you don't manage your risk. Don't forget, let's say for example, you have a margin call, you cannot fulfill a margin call and your position will be forced liquidated. So don't go into that direction. And the last is definitely not having a trading strategies or system. This is applicable for anything that you trade. You definitely need to have your trading strategies and system. So this summarizes the 3 key takeaways for my today's presentation. The first one is 3 essential for SSF. You need to know how to buy and sell, buy low, sell high. Your profit and loss calculation, remember buy low, sell high, or sell high, buy low, you're having a profit. And like if you start by buying high, selling low, you're having a loss. And there's initial margin, which is your deposit involved for single stock futures, which is relatively lower compared to your stock's initial capital. Second, 4 powerful reasons to consider SSF. First is the advantage profit opportunity in both rising and falling market. With your stock market, you cannot profit in a falling market. The second advantage, lower trading costs. Third is low capital required, because you can see that the leverage, the deposit is lower. That's why you have the leverage. And the final advantage is short selling. Definitely this is the highlights of it, because short selling in stock market is harder. Last one, 4 SSF trading strategies based on directional, hedge, leverage, and events driven. So this comes to the end of my presentation, and we are going to start with the Q&A session. I'm so sorry, it's quite late, but we are going to start with the Q&A session. And like what I say, if you have any question, you can click on the 3 dots, then click on Slido and type in your question. I'm going to pick your question and I'm going to answer your question. Now, before that, while waiting for your question, can you please give me a very short 30 seconds to 1 minute? Can you please provide us with your feedback? This feedback form is very short only. Normally it's about, on average, 30 seconds to 1 minute. You can finish it. There are 2 ways for you to access to this feedback form. First, you can scan this QR code, or else in the chat box, can you see the link? You can click on the link to provide us with your feedback. I repeat, you can use your mobile phone, scan this QR code, and provide us with your feedback. You can provide us in any languages, English, Mandarin, Malay is okay. Nothing that we require from you for this session. The only things that we require from you is this feedback form. So please allocate a very short time period for yourself and provide us with your feedback. And if you have any question, you can start to type in the chat box. And in the Slido, I'm going to pick up your question. Last 30 seconds. Okay, for those already submitted your feedback, thanks a lot for providing us your feedback. If you cannot finish, you can still continue to finish even after the session itself. Really appreciate your help by providing us with your feedback. If you're not yet finished or you're not yet started, you can still continue to provide us with your feedback at the end of the session. Now, currently, let me move into a question. Seriously, I don't expect that much of question for this session because these are relaunched products. That's why I don't expect much of question. But anyhow, I'll try to answer your question. I only pick those questions related to today's topics. Now, first thing I'm going to answer the first question by Adam. I can find all the Bursa stocks on TradingView, but I cannot find the SSF. Please remember for futures and stocks, there are 2 different platforms. you need to go with the brokers with futures. Like many of the brokers also, they don't allow you with one account opening, you can trade both stocks and futures. Many of them, they separated two different account opening forms, one for futures, one for stocks. So certain platforms, they are meant for equities only. So certain platforms, they are meant for futures. You need to go with the brokers or the trading platforms that have futures contracts. And if you are having the platforms that have futures trading contracts, but you can't find SSF, please check with your brokers. Now, second, for those questions, the difference between SSF, warrant, SSF, option, etc. Honestly speaking, please Google search or YouTube search. The reason behind is because I cannot summarize and answer you with one statement. But if I'm going to elaborate, I might not be able to answer the rest of the question. So the main difference between these all products, right, easily you can Google search and YouTube search. So I'm not going to answer this because like what I say, if I summarize and answer you, you might not really find the differences. So the best way is for you to Google search or YouTube search. Now, the next question is, are SSF only available index component stocks? The answer is not. From what I understand, is next quarter. Sorry, it's not next quarter. Right now, we are in September. First quarter of next year, which is 2026. BMD, they are going to add more stocks into this tradable list, meaning that you are able to trade more than 30 stocks. So it might not be index components. Even just now, the 30 tradable stocks, they are not all index components. So next year, they are going to add more popular stocks into this list, and you're going to see more stocks you're able to trade for these single stock futures. Now, the next question is, when the contract expires, is there physical delivery or all cash settled like FKL? No, even for this single stock futures, right, is a cash settled. If you can see just now when I presented the contract specification, is cash settled. So it's not physical delivery. You're not going to get delivered the stocks itself. And this all will be settled by cash, meaning the differences. You're going to pay or you're going to receive cash. You are not going to get the stocks itself. Oh, this one is very long. Let me see. Let me go through. Let me settle the rest of the shorter question, then I come back to this. Regarding the trading platform, you can go to Bursa Malaysia website and you can see all the all the futures brokers available. If I'm not mistaken, the same site that just now I showed it to you, go to Bursa Malaysia, you go to trade, you go to derivative, and there's a segment for all the trading participants. You can go and check it out. Who are the brokers available for you to trade? So basically, many of the stocks brokers, they have futures platform as well, but some of them they do not have, and some of them they are not stock brokers, they have futures trading platform as well. So I'm not going to mention specifically any of the brokers here. What are the risks of trading SSF? The risk for trading SSF. Very good question. Basically, I did not highlight this, but I just want to highlight the main risk that you need to understand is definitely your, what we call it as your leverage. Now, some of you say that it's a bit confused because just now leverage is in advantages. But don't forget, this leverage, it can magnify your profit, but at the same time, it can magnify your losses as well. That's why just now I mentioned that you really need to manage your risk when it comes to single stock futures. Do I need to worry about trading liquidity? Honestly speaking, at this moment, yes, because they relaunch it. But very soon they are going to get some market makers into the market and hope with the hope that they will provide the market liquidity. SSF Sharia compliance, unfortunately, it is not. Because you can see that it is a cash settlement. That's why SSF itself is not Sharia compliance. What happens if I hold on SSF until expiry without closing the position? If you hold until expiry, don't worry because it's a cash settlement. They will auto-calculate the final settlement value, and any differences, they will pay you the cash. I'm not going to go into details, but if you go back to the contract specification, which just now I skipped the last column, last row, there's a final settlement values. You can see how do they calculate, and from there, they will minus your buying or selling price. That is your profit and loss. They will bank in or they will deduct from your trading account. For technical analysis, should I focus on the stocks or the futures? Different products, different methods. But if referring to single stock futures at this moment, I would strongly encourage you to go with the underlying, which is the stocks, to do your technical analysis. Futures in commodity possible. Your question might not be clear. I'm not quite sure about it. Futures in commodities, yes, we have commodity futures like FCPO as well. Which underlying is best to trade? Sorry, because when any question come into it, right, then the whole flood it. One sec. Which underlying is best to trade? Any suggestion on how to choose? Basically, it depends on the stocks that you like. Like just now, the 30 stocks that is in the tradable list. Any stocks that you're familiar with or you have ideas that you wanted to trade. Like for example, if during a downwards market direction, if the economy is not good, you should go for those defensive sectors like, let's say, your consumer sectors. These are all defensive sectors. It will be better. So it depends on your trading strategies. All the stocks is good for you to trade. Going back to last question, the longest question, let me try to separate it out because basically I already answered all the question. Can you use a numerical example to show SSF price movement by using price of underlying stocks? Example, if YTL is now priced at $2.50, a minimum contract size will be worth 250. What happened if YTL move up to $2.75? What will be the tick size movement worth? Meaning if it moved to $2.75, so basically you are making 25 cents, right? You take the 25 cents, you times with 100 shares. But remember, because the minimum price fluctuation is 2 cents, every time you need to fluctuation by 2 cents. But in this case, because you're looking at YTL Corp, so if I expect the YTL for futures itself, which is your FYTC, is going to move to $2.76. So basically, you're making 26 cents. You times with 100 shares, then that is your profit, unrealized profit. I'm not quite sure I answer your question or not. So because of time limitation, I hope that I answer all your questions. And if not, you can still continue to ask us at the end of the session. Now, before I wrap up, just to highlight some of the few parts if you missed at the initial stage, not only for today's Let's Learn Futures, we have a webinar series, a series of it. Every Tuesday, we are going to have different topics covered by different speakers in different languages. So like what I say, any topics that you like in English or Malay or even in Mandarin, you can scan this QR code to register accordingly, or else in the chat box, our admin already put in the link. You can click on the link to register. If you scan this QR code, it will be dropped into our events calendar. You just need to select on the Tuesday itself and select the day for you to register. Now, besides Let's Learn Futures webinar series, just now, like what I mentioned to you the last time, I'm going to strongly encourage for those who do not have experience or background or never involve yourself in futures trading, I strongly encourage you to go and join this session. And the most important thing, this training session, we have trading simulation. So you're going to really experience how you're going to execute your trades. What are the trading strategies that you need to take note? So the upcoming 2 sessions will be the last session for this year itself. Bahasa Melayu session will be on 27th of September and the English session will be on 25th of October. Please register both sessions because basically you need to attend the first session before you can attend the workshop full. So each session is 3 hours. Again, you can scan this QR code or you can click on the link to register. And for this session, because we need to really focus in terms of that and train simulation is involved, we only limit to first 50 online attendees. We open for 120 to 130 to register. So once you scan on it, then you select on Saturday, you can register accordingly. Now for this page, please take a photo and send it to your friends if you know that some of your friends, they're interested to start in futures trading as well. So sharing is caring, share with your friends so that your friends can be benefited. I give you 2 seconds for you to go with it. Okay, this comes to the end of my session. I'm so sorry that because it is 5 minutes past 10 o'clock. And thanks for your participation. We hope to see you in the near future. And please remember to join the upcoming webinars and also online workshop. Thanks a lot and good night. Bye-bye.